From 11FS, this is Fintech Insider News, and I'm your host, Benjamin Ensor, Director of Research and Strategy. Thank you for downloading this podcast. If you like what you hear, why not recommend this to a friend? This week, we're talking about HSBC partnering with Nova Credit to offer international credit history checks. This is a brilliant initiative that makes it easier for people who migrate from one country to another to take their credit history with them so that they can do things like get a credit card or buy a house so they've got somewhere to live, or even, frankly, take out a rental agreement. So fantastic, great work by HSBC and Nova Credit to do that. Mercedes-Benz is rolling out in-car payments via its app. And we talked about what's the killer use case for this? Because if you've already got to get out of the car to kind of fill it up with fuel, what's the big deal about paying in the car? And then we thought about parking and all the different apps that you often have to download for every single car park you've ever visited. So in-car payments are coming. It's just it may not be that fuel's the killer application. And where would you hide your money? One unfortunate criminal was caught after wrapping £70,000 of stolen money in tinfoil like a sandwich. This hapless criminal decided to try and avoid attention by driving the wrong way down the road. So we talked about some of the strange places that we've come across or hidden cash ourselves, and of course about the fact that a lot of people don't carry cash anymore. So we get into all of this and much more on today's show. We'll be back after these messages.
Hey folks, we have super duper exciting news. The shortlist for this year's 11FS Awards is officially live. We asked you, the incredible Fintech Insider community, to help us choose the deserving winners of the 11FS Awards, and your response was outstanding. You voted in record numbers, and it's now time to see if your favourite fintech companies made the shortlist. With a total of 10 different awards up for grabs on the big night, including categories like Best Experience Design, Fintech for Good, Best Use of AI, and Consumer Game Changer, there is a lot to look forward to. Don't wait, explore that full shortlist now at 11fsawards.com. That is 11fsawards.com. And be sure to stay tuned to all of our channels to find out who will take home one of the coveted 11FS Award trophies on Wednesday, 15th of November. Looking to take your customer journeys to the next level and benchmark your products against the best in financial services? Well, look no further than 11FS Pulse. Home to over 5,700 user journeys covering everything from onboarding to crypto. It features analysis of global brands like Nubank, Revolut, and Robinhood. It's already tried and trusted by big names like Monzo, whose co-founder Jonas said their research phase took just a tenth of the time it normally would, thanks to 11FS Pulse. Join Monzo and hundreds of other brands taking their UX game to the next level by booking a demo today at 11fspulse.com/demo. That's 11fspulse.com/demo.
Welcome to episode 788 of Fintech Insider. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. I'm joined this week on Fintech Insider News by three great guests to break down this week's biggest stories in fintech and financial services. Firstly, I'm joined by Collin Galster, Head of International at Nova Credit. It's a great pleasure to have you back on the show, Collin. Please, can you tell our newer listeners a little bit about who you are and what you're doing at Nova Credit?
Thanks, Benjamin. It's great to be back. Thanks for having me. I'm a member of the founding team of Nova Credit. We are a data and analytics infrastructure company. We're best known for our few products, including our product called the Credit Passport, which is a cross-border credit data product we'll be talking about a little bit today. We also have a number of other products that support cash flow underwriting, verification of income. I look after our global expansion efforts, and so I'm excited to be here today and talk more about that.
Well, we're excited to have you, so thank you for joining us. We're also excited to give a warm Fintech Insider welcome to Amelia Isaacs, Senior Reporter at AltFi. Thank you so much for joining us, Amelia. How's the busy world of fintech news treating you, and do you have a particular news beat?
Thank you so much for having me. I'm very excited to be here. As you say, very busy times in the world of fintech and a lot of new products and exciting things coming up in the pipeline for AltFi as well, which is always exciting. So I cover everything and anything in the sphere of fintech currently. So whether that's payments, savings, investments, wealth, risk, you name it. At the moment, we're covering any and all of it under the fintech umbrella. So a pretty broad range of interesting topics on our radar.
Well, welcome and thank you for joining us. And we're also delighted to welcome Shaun Puckrin, Vice President of Product at checkout.com. Shaun, please, can you tell our listeners a little bit about who you are, your role, and all the great work you're doing at checkout.com, please?
Sure. Firstly, thank you for having me on the show. So Checkout, for those who don't know, is an acquirer and a payment processor. So we work with merchants to process their payments, and we do that across the world. I look after our core payment products, so our acquiring, gateway, authentication, and tokenization products within the company. So we've recently launched our network tokens and real-time account updater products. So hopefully we'll talk a little bit about that. But I cover a pretty broad range of the things we do at Checkout.
Thank you. Well, welcome to all three of you. Thank you so much for joining us. And with that, let's get into the news. So the first story we want to cover today comes from Nova Credit, which is that HSBC has partnered with Nova Credit to become the first UK bank to offer access to international credit history. So the new partnership between HSBC and Nova means that newcomers to the UK can now use their international credit history when applying for a credit card. The announcement is the first of its kind from a UK bank. So new and existing HSBC customers can choose to share their credit history from a current list of 12 countries: Australia, Brazil, Canada, the Dominican Republic, India, Kenya, Mexico, Nigeria, the Philippines, Spain, Switzerland, and the US. And that was quite a long list to read out, so well done. HSBC has seen a 79% year-on-year increase in credit card approval rates for newcomers to the UK with credit history from those eligible countries. And Nova Credit is the world's only cross-border credit bureau. Currently, more than 10 million people in the UK were born overseas, and 95% of the country's net population growth comes from immigration. Collin, this sounds like quite a big deal for Nova Credit and great news for a group of customers. Can you tell us what this means and how the partnership changes what HSBC already does?
Sure, of course. Maybe the place to start actually is to take the vantage point of a newcomer to the UK. Every day, thousands of people move to the UK, and they're fundamentally moving for better opportunities to make better life for themselves. And they're physically moving across a border, but their financial identity does not move with them. And so despite having a track record of experience with financial products and credit and lending in their home country, upon arriving in the UK, they're starting from scratch. They appear to be a totally unknown variable without having the benefit of that financial reputation that has been left behind there and available for them. And so the ability to access their home country credit history in this context is a really meaningful accelerant and catalyst to getting started on one's new life in the UK, and be able to empower that individual to benefit from their good behavior in their home country. We first started working on this problem in 2016. We started out as a US-based company, again, on that observation that people were moving to the United States, but they were having to start over from scratch. We began working on this. Our first flagship customer in the US was with American Express. And we spent the better part of last year building the foundations to be able to deliver the same capability, which goes by the name Nova Passport, into the UK. And we're very excited to be partnering with HSBC and be able to announce this relationship. You listed out very accurately the 12 countries that HSBC is currently using, but of course the vision for the product is to be able to support all corridors of migrants. So if you are coming not just from the UK to the US, which is where the product started, but now being able to support people moving from the US to the UK or Canada to the UK, or for that matter, the UK to Singapore. We want to ultimately be able to serve all of those corridors. And so this expansion represents a major advance forward on that front. In terms of HSBC, you asked kind of how does it differ from they serve this population today. at this point now, with the benefit of this capability, anyone who is applying for an HSBC credit product now has the ability to benefit from their home country credit footprint and utilize that as part of their application submission. HSBC, of course, is well known to be one of the world's global bank. They have a long-standing strategy to serve newcomers globally. Why do they have that strategy? Well, there's good business reasons. People who are global citizens, they tend to be upwardly mobile, and so we know this segment is highly profitable and highly attractive from a business standpoint. But it's also a natural starting point for HSBC because of their global brand footprint.
Yeah, I mean, you're right. It's a very natural fit for HSBC given their branding. I mean, there's a little bit of me that's tempted to sort of ask, well, how come they hadn't done this before? And I realize that's not necessarily a fair question to ask you, but presumably they were pretty enthusiastic in their conversations with you and pretty keen to do this.
It's probably not for want of trying. I think it's fundamentally a data access problem. The infrastructure just simply didn't exist. And so HSBC has been historically fundamentally limited in its ability to know a person on an individual level when they show up in a newcomer context. And now, by virtue of having that infrastructure built and being able to benefit from it, they can actually treat individuals as individuals and actually right-size their offerings in terms of credit products to people. So you can assess people for, you can approve them at a higher rate. I think the stated number that HSBC shared publicly is around an 80% increase in their approval rates. But they can also offer better terms, better pricing terms, better line assignments, better tailored and fit to the individual credit products by virtue of knowing the individual at that level.
Shaun, what did you think of this? You must see other sides of this problem, through all the merchants that you have that maybe have customers who are struggling to buy because they are themselves migrants and they haven't got the right type of credit card or whatever. What did you think of this? Is this exciting news? Do you see this as a big deal?
I mean, it's definitely a big deal. I think one of we kind of have the main similar problem we have is verifying merchants. So people who want to apply to be a merchant, we have to go through a long vetting process because of the regulatory environments that we sit in, anti-money laundering, all that kind of stuff. And so it's a similar problem in that it's a data access problem. It's how do we verify the individuals, one, who are they say they are, but then their credit worthiness. And it's hard, right? And so the services that exist to stitch that data together and present it back in a consumable and actionable way, make a massive difference to the ability for companies like us to do our business. So when Collin wants to turn his attention to merchants, then we'd definitely love to chat, right?
It sounds like the beginning of a wonderful new partnership.
Awesome, yeah.
Amelia, I'd love to bring you in as well. What did you think on this HSBC thing? Because, you look at it and you think, yes, this is a really good fit for HSBC's brand. But there's a bit of me that's thinking, well, what about some of the fintechs? What about a Revolut or a Monzo or, a Starling? Have they missed a trick here? Great for HSBC. How come they were first? Like, where's everybody else?
I don't know. I think that would be a question for Collin more than it would be a question for me of why the fintechs didn't sneak in there before HSBC. But I mean, hopefully this means that it sort of paves the way for more similar partnerships and more increased accessibility and inclusion for groups of people that are largely underserved. I mean, we talked about the fact that it's a largely profitable market, but it is still pretty underserved. The specific mention of Revolut, they just a few weeks ago published data on students specifically, but the amount of international money transfers to students, I think it was more than 100% increase. If they just
100% increase since when?
Since the previous year.
Wow.
So okay. I think maybe this is one that we want to double check, but I think that if that was a group of people who had access to bank accounts, obviously it's great that we have so many fintechs that are increasing the ease and ability of money transfers and reducing the fees that banks typically have. But if larger groups of people just could open a bank account in the first place or have access to credit cards, then maybe that wouldn't be necessary. Maybe they wouldn't be having to transfer such large volumes of money from abroad.
Collin, how much of the problem for sort of new migrants to a country does this solve? I mean, obviously it's great if you can take your credit record with you and use that to sort of build a life in your new country. But are there still a whole series of other barriers that migrants face when they move to a new country, financial barriers specifically?
Yeah, definitely. I mean, maybe the place to start is just to acknowledge that we can serve immigrants from countries that have the requisite level of credit reporting infrastructure in the first place, right? If you come from a country that simply doesn't have credit reporting infrastructure or a mature consumer lending landscape as an industry, then you're going to be limited in your ability to benefit from from a service like this. I do think that the number of challenges that newcomers face is broader, certainly within financial services, but also even more broad outside of financial services. And we know that it extends across many goods and services. One area that we often hear from newcomers complaining about is getting access to. It depends a lot on your journey and what you're doing. If you're a student and you're arriving, your needs are maybe very different than if you are a working professional with a family who's trying to move over multiple people and is very concerned with finding the right amount of space. But there are a number of challenges. I mean, certainly the legal system, the immigration system presents unique challenges. Financial services is an important part of that, but it's not the end of the line.
Shaun, why is this so hard? I mean, there are, fintech has done a fantastic job as an industry in solving a number of problems, but it's sort of still surprising that credit ratings are still so national. We have, Visa and Mastercard and so on have existed for decades, and yet credit ratings are still very sort of national. Why is it so hard to do this across multiple countries, do you think?
It's a great question. So I think it's hard because it's hard, right? Like I think the collection of data, who gets to control that data, like who would manage such a system, right? Who would we trust to manage that kind of thing? From a national point of view, you have a government. Ultimately, they run. They set the framework and the legislation by which you can gather this kind of and store this kind of data. There are lots of other things around data privacy, that kind of stuff that means that this stuff is a genuinely tricky problem to work out how you solve for it. I think then it's a question of who would manage and regulate that. And I think, as Collin said, in some countries there's good regulation, in other countries there's none, and so finding the stores of that data is hard. It's a really hard problem, and the one place that I've certainly seen it with migrants as well is in property. So kind of sorting out rent and that kind of stuff. People are looking for history or some way to validate that you're there. So there's lots of places where that financial reputation is super important. And I think it's still one of the kind of hard ungreased gears of the system that has taken time. And it, like I say, there's nothing that's there's no magic here, right? Like it's just a lot of hard work, right? It's a lot of what Collin's doing is it's finding those data sources, working with the local governments, local regulators to find ways to extricate that information in a way that they feel comfortable with.
Maybe just building on Shaun's point, if I can jump in for just 1 minute, I think it's a really smart insight about data governance and who actually controls the data. If it were the case that there's no global credit registry system, there's no global identity system. So we're instead dealing with a bit of a patchwork of systems that have grown up organically over time in isolated contexts, all solving similar problems of how do you manage individual consumers' credit reputation over time, but they do it in slightly different ways, and those differences create a lot of barriers. One of the key aha moments for us as a business early on was recognizing that the only common denominator in every country in the world that has a credit reporting system is that consumers have a legal right to access their own credit data file. And that right is not circumscribed by where you are physically located. So under UK law, you have the right to access a copy of your credit report from licensed CRAs. And it doesn't say you can only do that if you're sitting in London. If you're sitting in New York, you can do the same thing. And so that puzzle piece, I think, is very important to understand. It's really the consumer who's at the center of the transaction. They're the ones raising their hand saying, I want a copy of my credit file from the US, from the UK, from Canada, from Brazil, and I want to use it for my own benefit to help me, get started in this new location. And that's a really important construct. We provide that infrastructure and that platform to execute that transaction, but there's not some Nova Credit database that is a super database or something like that.
That's a really, really interesting insight. Well, we need to bring this story to a close, but congratulations, Collin, on everything that you and your colleagues have built. I think Shaun articulated well some of the challenges that you've overcome. So last quick word to you, Collin. What's next for Nova Credit? More countries, more banks? What's next on your agenda? Very quickly.
Yeah, we're here in the UK. We're open for business. So we're a licensed CRA now. We're working with one of the flagship financial institutions. I think the UK, like all developed economies, is in a position of demographic decline where the only source of growth is from inflows of newcomers. The UK grew by 1 million people last year, but 100% of that growth was from newcomers. And so we're excited about the prospects. We see a lot of opportunity to work with more types of businesses in the UK. As a business, we continue to add more outbound countries, source countries from which we retrieve data. We've got a lot of exciting things coming in the next few months to announce on that front as well.
Fantastic. Okay, our next story was reported in Fintech Futures, but lots of other places covered it too, which is that Mercedes-Benz and Mastercard are trialing native in-car payments at petrol stations across Germany. So the new partnership means that Mastercard debit or credit card holders can now pay for petrol in their car using the Mercedes Pay Plus service. Mercedes Pay Plus uses fingerprint technology to verify the customer and is synced to the vehicle, which means it can calculate the required amount of fuel and cost mid-transaction. It's been launched to more than 3,600 petrol stations across Germany, but the partnership with Mastercard means it can now target a wider expansion of payment services. Mercedes Pay Plus was launched in March this year, but initially only supported payments for Mercedes-Benz e-products and services via its online store or the Mercedes Me app. Following the announcement, Chairman Franz Reiner confirmed that Mercedes-Benz is working on further integrations. So let's come to you first on this one, Amelia. Are in-car payments the next big thing, or are they just a fad?
So I'm going to hedge this and not give a concrete answer because I don't want to be responsible for saying that it is or isn't. But I do think that it makes sense as a sort of next step. And I think beyond using your phone or using your face or using your fingerprint to pay for something, it's not that big of a leap to think that you could pay for something from the comfort of your car. So I think that it's not necessarily the next big thing or a fad. I think that long term, it makes sense that payments are going to be able to be in different places beyond just your phone or your laptop or wherever it might be, or in person if we're going old school. I think that sort of this infotainment system is how they described it, is what's in your car. If you think about it, it doesn't necessarily seem that different from having an iPad or a tablet of some kind. The location is just in your car. So is it that helpful necessarily? Are you removing that much of a friction in the payment process? Maybe not, but is it that great a leap from just getting out of your car and tapping your Apple or Google or whatever wallet? Not really.
Exactly. Shaun, I want to come to you as the payments guy. The thing I'm missing here is if I have to fill up my car with petrol or diesel or whatever, I have to plug it in. I have to physically get out of the car and plug something into it. So if I'm already out of the car, am I missing something, or is fuel payment maybe not actually the best use case for this? Am I missing something? What do you think, Shaun?
Yeah, I'll hedge and not hedge. So in my answer, so I think on the particular use case, I don't know. I can have an opinion about it. I think I can see some value being added by the car being able to be smart about the amount of petrol it wants to take, or think about that, and as a result, reduce fraud. Or I can see that these numbers make sense in terms of the amount of fuel that I'm providing. I think on the area where I won't hedge is, I think what we're seeing is a proliferation of payment being embedded into different experiences. That can only be a good thing, and it's been enabled by a couple of key technologies that have been driven by the schemes and payment providers. So one of them is delegated authority. So one of the things that we have in payments is always the ability to try and establish your identity as a key element of that. And as part of the 3DS spec, that was very heavily described how that should work with a card payment. So we have the one-time passcodes or the authentication. With delegated authority, you can essentially go through a process by which you can you can be in charge of that authentication. So this is what Mercedes are doing, is saying, hey, look, we've got a fingerprint scanner in a car that should be good enough to qualify for these kind of ways that we can authenticate the payments without adding additional friction. So they're leveraging that technology to do that. And then the other one is kind of the cloud token frameworks, which allows you to specify a trusted device. In this case, the trusted device is a car. And so again, it's kind of adding a layer of identity and security to that transaction, which means you can reduce the friction associated with it. And so there are really, on that side, I can really see sort of the benefits. It means that it becomes a less challenged transaction because of the fact that you're adding these other factors. Now, whether this particular use case is the best use of all those things, let's see. I'm sure others will have their opinion on that. But I think it is good to see that the technologies that the schemes have been launching are being used to drive innovative use cases.
Is the use case here perhaps parking, where there's a myriad of different parking systems? Every single car park seems to have a different system, and you end up with dozens of different apps on your phone, none of which ever seem to work. Collin, what do you think?
I think it's smart. I mean, I think Shaun touched on it as well. I think this particular use case, I almost see it as the kind of thing that's attempting to get a little bit of attention for an underlying technology that's really about its capability, taking the payments and embedding it into a different device, as Shaun put it. And I do think something like parking makes a lot of sense. I know I personally fumble quite a bit when I go into parking garages, even street parking. There's a myriad apps you have to download and use to pay. And that's actually quite a frictionful experience. Everyone goes through it because you have to. But I could see the pain as a user or a driver associated with that being high enough for me to really care about paying through, validating my fingerprint on my car and getting out, walking away, and not thinking twice about it.
Amelia, do you think there's a big opportunity for the car industry to, not replace the credit card by turning a car into a payment device, but do you think there's a wider opportunity? Do you think this is the beginning of a new thing where maybe a whole bunch of things that we're buying for our car or related to our car, or even other things we're just getting for the home, is this the beginning of a new frontier, or is this just a gimmick?
Yeah, it might be. I think parking is definitely the use case that springs to mind as the thing that makes sense. But there was research done that was part of this announcement by GfK, which on behalf of Mastercard, which said that 60% of 18 to 39-year-olds would prefer to pay for their petrol using a built-in payment system. So as much as to me and to all of us, maybe it doesn't really make sense if you're getting out of the car anyway, apparently 60% of this age group would prefer to pay using that. And there's an increasing number of people that said that they would be happy to use it to pay for other things. Now, to me, using my car to pay for something completely unrelated to car products seems a bit odd. But again, if you're using your phone, if you're using your Face ID and it's connected to your car in some way, then it doesn't seem like that great a leap to be using that as your method of payment if you're in your car anyway, and it becomes easy and they make it easy for you to make those payments. Maybe it starts off with being petrol or fuel or parking or car insurance and things like that first before, I don't know if you're going to pay your phone bill through your car, but and I don't think it's going to be making its way into being a very, very large credit card anytime soon, but I don't think it's a massive leap for it to be used, especially as an identity verification, as you said, Shaun, for payments.
But if we think back, perhaps back in about 2000, people didn't foresee the extent to which mobile phones would just become the way that millions of us, billions of us potentially just pay for stuff. Could it be that in 10 years' time, actually just paying for things from your car is just a completely natural and normal thing to do that we're just doing all the time?
Yeah.
Maybe it's more of is it a passenger driver thing? Is it that the passenger's actually sitting there shopping away? Shaun, what do you reckon?
Yeah, I think it's very possible. I think it's more to do with the platforms the cars run on than anything else. If you at the end of the day, Android and iOS are taking over cars, and these are the platforms that hold our payment credentials, and so leveraging those payment credentials in other ways, makes sense. I agree with Amelia. It probably makes sense to do them in the context of a car, element rather than use them elsewhere. But that sphere will grow. I think the other thing, and I think the main opportunity for the car manufacturers here is this kind of emergence of car as a subscription platform. And so I think we're seeing more and more of that, and where I have a feature in my car, but to leverage it, I have to pay a subscription or pay for a one-time cost. So I want the aircon on, I'll pay for it. I don't know whether we get to that far, but I think you're starting to see those types of models, being started by the car companies. I think it's more likely to make sense in terms of fuel insurance, particularly, and where we get to more of as kind of like pay-as-you-go models for leveraging a car. I can see those things, with embedded payments making more sense, less than I'm going to do my grocery shopping through my Audi, right? So yeah.
And less than until we actually get driverless cars, then the driver passenger shopping while driving might make a bit more sense.
I'm reminded of a story that came out it was one of the natural disasters in the States. I can't remember when it was. It might have been somewhere sort of in Louisiana or whatever, and there was a hurricane coming. And Tesla suddenly announced that it could extend the range of a whole bunch of its cars. And I was thinking, well, if I'm a driver, yeah, that's great that Tesla suddenly extended the range of my car. But also, why on earth didn't they just give me the longer range in the first place? And so, Shaun, I think you're making a really interesting point about, did car manufacturers start sort of limiting certain features and charging? Is driving your car going to become like a Ryanair flight?
Well, I think driving a car will become like choosing an airline, and therefore, in some cases, you may pick the Ryanair version. In other cases, you might pick the Virgin or the Emirates version of the car that you experience that you want, right?
I guess Mercedes-Benz probably wants to be the Emirates of car providers rather than the Ryanair, but maybe I should shut up before I get in trouble. Right. Let's move on. We will take a quick pause here while my lawyers speak to me, and we will be back very shortly.
A lot of you know 11FS for our chart-topping podcasts, our events, videos, reports, and a bunch of other cool stuff that we do. But what a lot of you don't know is that this is just all our side hustle. We do so much more than that. At 11FS Ventures, we're partnering with ambitious businesses around the world to design, build, and launch truly digital financial services. We are building banks, shaping new propositions, and growing existing offerings that change the fabric of financial services. And our design, research, strategy and engineering experts are working to improve your customers' relationship with money. To find out a little bit more, check us out at 11fs.com/ventures.
Welcome back. Before we get into the second half of the show, a note to go and check out our most recent Fintech Insider Insight show. Our very own Ross Gallagher is joined by some expert guests to discuss careers in financial services. They discuss what you should look for in a career in financial services, how it's changed over time, and how fintech has changed some of the historic image problems in banking. So go and listen to that episode. Find it in our podcast feed. It's the one just below this one. Right, let's get back into the news. So our next story is from AltFi, and this is that Standard Life and Moneyhub in the UK are launching a new commercial pensions dashboard. The new dashboard will sit within Standard Life's customer app and expands on the firm's existing partnership with Moneyhub. The app already includes access to Money Mindset, which is Moneyhub's financial wellness tool, which provides customers with real-time insights on their spending and savings behavior. The pensions dashboard will be integrated with this to give customers a more advanced and immediate view of their retirement savings. It will be one of the UK's first fully functional pension dashboards. The new service will launch to Standard Life's 4 million customers when the Financial Conduct Authority's regulatory approval process comes in. If successful, Phoenix Group, which is Standard Life's parent company, may expand the service out to its 12 million customers. Amelia, you reported on this story on AltFi. Can you tell us a little bit more about this? What exactly does it mean for Standard Life's customers, and is this good news?
Yes. So I think that the place to start with this is to zoom out a little bit and talk about the pensions dashboards in general, because it's both quite simple in its goal, but it's also had a very complicated journey that it's still very much on. So to know what this means for Standard Life's customers specifically, it's helpful to know a bit of background on the pensions dashboards. So when they eventually launch, they'll allow individuals to access all of their pensions information all in one place. So people aren't really lifers anymore. They don't join a job at 18 and stay in it until they retire. People, on average, have 12 jobs over the course of their career. So that's a lot of different pension pots in a lot of different places. So what that's resulted in is around £27 billion in quote unquote lost or unclaimed pensions in the UK. So the pensions dashboard aims to have one centralized place where people can view all of their various pension pots that they've accrued over the course of their life in one central place. Now, it was originally meant to launch in 2019. It then got pushed back to August 2023, which we've just passed, and it's been delayed again until October 2026. So when we talk about this product that Standard Life is coming out with, it's also important to know that it's potentially years in the future. We don't exactly know when it's going to be yet, because that will be determined by people outside of Standard Life's control, because you need all the pension schemes and pensions providers to opt in. Well, not opt in, they don't have a choice. They have to do it, but they have to connect. So the deadline of October 26 is the deadline they have to connect by.
So you're saying this is like open banking, this is open pensions, but the regulation is just being pushed further and further out into the future?
Yeah, that's a very good point of comparison, in fact. And because it was started before open banking was really a thing, that's part of the reason why it's been pushed, is because now that we have open banking, it makes it easier to amalgamate all these different bits of information, but it means they sort of start it again.
Why is it taking the regulators so long? And I realize this may be an unfair question because you may not have spoken to the regulators, but why? It seems an awfully long time to delay something from 2019 all the way to 2026.
Mm-hmm.
I mean, you could have a 7-year-old child in that time. I mean, that's bizarre.
I agree. I wish I could tell you. I wish I knew the answer, because it's kind of baffling. And based on the numbers, there's so many people who are missing out on a lot of money because they have bits of their pension lost in different places that they don't know how to access. And this product would be a huge help. So obviously it helps you throughout your lifetime, being able to access it and have a view of your pensions. But specifically, if you've wanted to take your money out of your pension in the last 7 years, or over the course of 7 years in total, when we get to 2026, which is when it might be that this eventually comes out, there's going to be a lot of people who in that time frame have missed out on a lot of money. So I don't really know why. I think the open banking introduction is part of the delay, but then that also should have sped things up.
Collin, this sounds like the sort of problem we need, some Nova Credit thinking to solve. And because Amelia is absolutely right about people switching jobs, but of course some of those people switching jobs are switching countries to change jobs, and then suddenly you've not only got multiple pension pots, but you've got pension pots in different countries under different regulatory schemes. Is this something that you've even talked about at Nova Credit as something? I mean, do you see any ways to sort of address this?
Well, yeah, it does strike me. I'm just hearing Amelia describe the challenges. It does strike me that the heart of the challenge is very similar in nature to what we discussed earlier, in that you've got people taking different types of life journeys, and you've got underlying data infrastructure and databases that were built in a different time under different assumptions. And we're in the challenging position of trying to mesh those things together and make them work, and building a modern architecture that allows individuals to make choices like moving between jobs or like moving between countries and still yet benefit from the things they're entitled to. In the case of pensions, is something that I think is a really hard challenge. My instinct and my intuition, again, from our experience building that type of financial architecture, is some sort of, open banking paradigm is probably the right way to go, having more open standards and making more interoperability and allowing consumers to be able to have the tools like dashboards to be able to make changes and make decisions is probably the right way to go. I don't think there's a way to backward integrate the old architecture into the new paradigm. I think it's just building the layer on top that's going to be able to make it interoperable is probably the way forward.
As a quick aside, among the many fantastic nominations we had for the 11FS FinTech Awards for this year was one for a company called Finax, which is embracing the pan-European personal pension product. So the European Union is trying to solve this this particular problem of people having pension pots across multiple different countries by creating a pan-European pension product. So that, the regulators in the EU are actually trying to move forward fast on this. Shaun, I'd love to bring you in and get your take on this story. Amelia's right. This is a real frustration for workers who move around. It's really frustrating. The industry isn't solving this, and the regulators aren't moving faster. What do you think?
Yeah, I mean, I'm again myself in trouble here and say that I suspect or I have a hypothesis, so no facts, that the pushing out of the regulations to do with people not being able to build the systems quick enough, right, and a lack of incentives to do so, right. That's kind of certainly what happened in open banking as well, right? So, and I think any of you who have a pension in this country, log on to your pensions. I don't think you're seeing a hotbed of UX and technical capability to deliver these things, right? So my sense is that these things are. I think the nation is desperate for it. It's a massive problem, and I think if it can be established, then those who embrace it and leverage it will do very well. And I think that from a regulatory point of view, yeah, like I say, I suspect they're just a bit hamstrung in terms of getting the companies to all play along. I think the the sheer amount of money that's lost here is criminal. The incentives in the pension industry, I think, are wrong, and I think this goes a long way to address it. If I think about, do I get to choose my pension program? No, it's chosen by my company, and as a result, the incentives are there to drive to win that business, not necessarily win my business once I've left that company. And so, by having these systems in place, suddenly I have visibility. I can then make decisions about where I put my money and what the impact of that can be. And that's just not a tool or a service that people are aware of. The amount of effort that you need to go to do that yourself is huge, and with no guarantee of better outcomes as a result. And so, it's long overdue. I can understand the industry inertia to get there, but it is up to the regulator to kind of poke them pretty hard to get there.
I love that point you make about, one of the problems is the pension industry is focused on the employer rather than the employees, and therefore haven't got an incentive to solve it. And I think your hypothesis about the state of systems within pension companies is probably correct, but maybe some of our listeners will tell us we're wrong. Collin, the US with companies like Plaid and so on, and the 401ks and rollovers and so on, it's a bit further along the road here, right? It's easier for Americans to get a sense of their retirement savings and aggregate all of those into one place. Am I right in saying that America's just well ahead of the UK in this area? Not well ahead.
Might be a case of the grass is always a bit greener on the other side of the pond. You might say that. I think there's a good, as you allude, there's a good proliferation of fintech tools that are being built on the back of open architecture to be able to allow visibility into accounts and different types of accounts. I actually would argue, and I may not be the latest up to speed here, but I haven't seen as many participants in the market focusing on like pension schemes in particular to facilitate like switching of providers and things like that. Usually it's much more on the current account side or other kind of credit accounts. So I think the infrastructure exists, and I think, in the US, we've also got different constructs, which are even more confusing around private pension plans and 401ks that are owned by individuals or by companies. And so, yeah, it is a bit of a mess. There's certainly not a clear winner or a clear set of tools. I think everybody just kind of muddles through it at the moment a bit. But at least there's a bit more of the infrastructure. I think the actual application layer is still to be built.
Well, Amelia, maybe there's a new article idea for you of which country is furthest down the path of making it easy for people to track their pensions.
Yeah, who's ahead in the race?
Indeed. Okay, let's move on then to our final big story of the week, which is that Checkout.com is launching network tokens. So Checkout.com, which we know because Shaun has introduced them, has just announced that it is launching network tokens. A network token is a digital replacement of a bank card, so customers do not need to share their bank details when making payments online. Network tokens streamline the checkout process, reduce the need for additional authentication at the point of sale and make the transaction workflow simpler and more secure. Checkout.com itself launched in 2012 and now deals with over 150 currencies, with a number of products and payment solutions such as fraud detection and ID verification tools. So, Shaun, obviously we're going to come to you first. For those who aren't too familiar with this, can you just explain a little bit about what a network token is and how it works and why it's a big deal?
Sure. Many of you are familiar with tokenization, sort of without knowing it, right? So tokenization has been around for a while. Initially, and still in many cases, tokenization was a way for merchants to remove the need of PCI compliance. And so PCI compliance is the sets of rules and regulations that anyone who deals with card information has to do to make sure that we're all secure when people use cards. But it was quite an onerous level of work that a merchant has to do if they want to store cards on that side. And so what they do is they tokenize with a provider like us. And so they give us their card numbers. We give them a token, which is a representation of that card, but not a card. And every time they want to use that card, they then give us that token, and we then go do the card transaction. So the merchant never has the card number, which means if they're ever hacked or breached, there's no sharing of that information. What a network token is an evolution of the idea that we have with Apple Pay or Google Pay is a good example. They leverage network tokens already, so or often what's called a digital PAN. So when you put your card into the Apple Wallet, it's not your card that goes in it; it's a digitalized token. And so again, if that is ever compromised, your card details are not compromised; only the token is compromised. So network tokens is the extension of that idea. So taking that idea of a digital token, your card is turned into that digital token. That digital token is unique to you and the merchant. So it's only ever usable in that context. And so what we're doing is we're enabling every time that a transaction happens, we can substitute your card out for a network token. We talk to Visa and Mastercard to get that network token, and then that network token then is a relationship between your card and that merchant, and so it's more secure. And if it's compromised, then the blast radius of that leak is pretty low because it can only ever be used in the context of one merchant. So this enables often in payments we're often trading off risk versus acceptance rate versus cost. Network token is one of those nice products that increases all of those, decreases cost, but it's an improvement in all of those areas.
How is it different? And maybe I missed it in what you said, but how is it the network token different from the sort of tokenization that you're doing already?
Yeah, so the network token lives beyond the acquirer or the merchant provider. So in the original context that I talked about, that token was only relevant between checkout and the merchant. And so if the merchant if you wanted to, you couldn't use that token with another provider. What a network token does is that it lives in the whole scheme. So that network token is known to Visa and therefore can be used with any number of merchant providers. So it's a genuine, unique thing between your card and the merchant, but can be used if the merchant has multiple payment providers or works in different countries, that kind of stuff. That network token is still pervasive across all of those things.
Got it. Okay. So essentially this just creates more security in payments because it reduces the number of places where customers' card details are getting stored, which reduces the risk of that information leaking out onto the dark web or wherever.
Exactly. The other key benefit is what we term lifecycle management, but that's a fancy name for making sure that expiry dates don't cause you to miss payments. And so a network token's lifetime can be different to your card. And so one of the other things that happen, if your card expires, you can still keep your network token. So we can update that link in the background. So if you've used that card as a subscription or something like that, then actually beyond the life cycle of that card, that can still keep being charged. Or if you have a lost or stolen card, it's been replaced, it doesn't mean you have to replace your card within a merchant where you've stored those card details. So there's a lifetime. There is a benefit to the consumer in that they can not have to update all their card details everywhere once those cards expire or have something bad happen to them.
So technically in the background, as checkout.com, so let's say my card has expired and presumably my bank is issuing me a new one, and maybe I've already got it digitally. But how do you know that I've got a new a new card and I haven't closed that account down, presumably are you checking in the background, or is it just a safe assumption that it's still valid?
No, yes. So we're going back to the schemes. So the issue is updating the schemes, and then we're going back to the schemes every time that card's used to say, hey, is this card still valid? Is this token still valid? Do we need to update the network token? If so, yes, no, or kill it, right? So it doesn't mean we're automatically going to approve that transaction. It means that we're in the background constantly updating that information to make sure that the card details that we have and the tokens that we have are valid tokens to process transactions. The issuers are doing the same on their side. So they're constantly talking to the schemes to make sure that they're updating the schemes with that updated information of whether your card's been lost, stolen, updated, all of that information.
And will consumers even see this? Will consumers be aware? I mean, are Amelia and I already using network tokens and we just don't realize? Will customers have to do something new, or is this in the background?
No, so yeah, it's completely transparent to consumers. So you don't know it's happening. Invariably, some of your cards are already network tokenized. Like I say, the biggest thing that people observe is that that card they thought expired is still being used for Uber or something, right? Like that's something, and I don't think the issuers have done a great job in explaining that to them. Now, network tokens aren't the only way that happens. There is also a technology which we also are launching called real-time account updaters, which does this without the need of network tokens. But basically a similar principle where if a card's expired, we go back to the scheme and say, hey, is there an updated version of this card? If there is, great, we'll get that. We'll use that instead. And this is a huge, for some merchants, this makes a massive difference in terms of the number of payments that get accepted. And it's also, a benefit to consumers because it means they don't have to update those card details whilst maintaining all the security that sort of sits around with that. So yeah, I mean, what you see as a consumer will be pretty small, but it is important that you understand what's happening.
Got it. Amelia, what do you think of this news? Do you think this is exciting, or is this something that's going to sort of go over the heads of clearly consumers? But is this exciting for merchants? Do you think? What do you reckon?
Well, can I ask a question first to
please.
Shaun? Do the network tokens then, in theory, never expire?
No, they can expire, but they expire.
Okay.
They're less likely to expire.
When you say less likely, does that mean it's who is that determined by?
So it's usually determined by the issuers. So like if they say, look, this card should not exist anymore, you should not be able to do any more payments. At the end of the day, the same flow still happens. Ultimately, that network token is getting turned into a real card detail, which is then whenever you do a payment, the issuer is deciding whether that payment should be allowed or not. And that can be for a whole bunch of reasons: fraud, not enough money, all that kind of stuff. All of that flow still takes place, right? So there's no added risk in there. It's more that it just won't be compromised and we can manage the life cycle.
Is this to some extent the beginning of or a continuation of the sort of separation of identity from particularly the physical card, right? I mean, the credit card was an amazing invention. Credit cards have been amazing. They've done so many things for so many people. But over time, really, you need to be able to authenticate the customers who they say they are, and you need to confirm that they have funds, either credit or debit. You actually don't need the card or even necessarily the card number. I mean, again, credit card number, brilliant invention. But at some point, is this just part of the gradual evolution away from the credit card number, because there are now other ways of authenticating that the customer is who they say they are and that they have good funds?
Yeah, I think that's definitely true. I think there's two elements, right? There's identity and verifying identity is one area, and then there's the metadata associated with a payment that allows us to decide what we should do with that payment. So whether that's to prove it's more likely to be where it says it's from, all those sorts of things. And so, yeah, this is you say, I think abstraction is the right term. There's a lot of cards become very institutionalized in the way that people think about payments. Doesn't mean they're always correct, and so this is leveling up the ability to secure that data as it flows through the networks, whilst also providing the levels of metadata that all the players need to be able to make good decisions about those payments.
Thank you. Collin, I'm sorry I didn't give you a chance to chime in. What do you think?
No, not at all. I mean, I think it's fascinating. I love any advances that drive greater abstraction away from the kind of fragmentation that existed in old systems. And I think that the ability, I guess, as I understand it, at least, it helps to preserve continuity of the relationship between the merchant and the consumer, the person driving the transaction over time and across geography. And it just makes it a better user experience in that way as well. So one question I had, Shaun, if you don't mind, do network tokens, I understand that they reduce the prospect of bad actors getting access to sensitive information by reducing the surface area of like where the sensitive information is stored. Are there other benefits from a user journey perspective in terms of authentication? Is authentication at a higher standard, or is it in other ways less risky?
So authentication is not necessarily a high standard, but because of all the reasons we've described, you can factor that into your decision making about whether you want to challenge a transaction. And so there are many things that go into that. So all the players in the ecosystem will be making decisions based on the data they have about whether they should trust that transaction, put that transaction into more of a challenge state. So give you the one-time passcode or make you authenticate that transaction. So by having a network token, that's a good signal that this is less likely to be a fraudulent transaction. It's not the only signal, but it's definitely one that's there. And that's one of the reasons we see better acceptance rates for network tokens. I think the other thing that's important to talk about here as well is, like anything in payments, there's relative adoption across all the players in the market, and so some banks are faster than others to adopt this. And so, what's really important and something that we provide is machine learning that sits on top of this to say when should we use the network token and not. So if we know that the network the issuer on the other side is not great at accepting network tokens, then we'll revert back to the PAN in the transaction. So that's intelligence that we're providing on our side. We're constantly running experiments to make sure what's the most likely way for this transaction to go through, what's the safest way for this transaction to go through, and we'll sort of then dynamically decide whether the original card or the network token should be used at the time of the transaction.
Fantastic. Thank you, Shaun. Congratulations to you and your team, and thank you for educating, I think all of your fellow panelists, as well as most of our listeners. But really, really exciting stuff. Okay. So now for Big Click Energy, which is a quick fire roundup of some of the more click-worthy news of the week. And we have a story from Reuters about JP Morgan Chase banning crypto payments from October the 16th. All crypto payments will be banned by JP Morgan's UK bank due to a rise in fraud and scams. Chase in the UK launched 2 years ago and now has 1.6 million customers with plans to expand to other markets in the future. However, crypto has been a cause of concern in the UK due to the increased use of crypto for financial crime, and Chase is the latest lender to throw restrictions on it, following in the footsteps of NatWest, Santander, and others. If you like this story, go ahead and subscribe to our sister podcast, Blockchain Insider, where Maurizio Magaldi and guests discuss all the big issues in crypto. So we've had this story on Fintech Insider before, and it's quite a controversial one, right? Because does stopping people from moving their money where they want to really get to the root causes of crime? It certainly slows it down. It certainly causes people to think. But isn't the real issue actually just trying to fix some of the fraud in crypto rather than preventing customers from moving their money into it? Our second story is that Swift and Wise have partnered to improve cross-border payment options. This was reported in the papers. So the communications provider Swift and global money transfer fintech Wise are partnering to create better cross-border payment options for financial institutions around the world. This collaboration means Swift payment messages can now be routed through the Wise platform. So customers sending money through Wise will get additional Swift features, including payment status tracking, thanks to Swift's GPI technology. This is fascinating. This is a collaboration between a fintech and one of the old guard of financial technology. Really, really interesting. Swift, a huge influence, huge, routing for large corporate transactions. Wise, obviously, huge presence in smaller, consumer payments. Fascinating to see these two collaborating. Really, really interesting. Third story, busy week. Fujitsu is trialing generative AI for Japanese banks. Fujitsu is getting into the fintech game through new generative AI technology to improve banking operations. Hokuriku Bank and Hokkaido Bank will be the guinea pigs for Fujitsu's new AI platform, which will support services ranging from everything from internal inquiries and document verification through to program creation. It comes at a time when regulators around the world are looking closely at how to manage the use of generative AI tools in banking. And this one is possibly the most profound story. The impact of generative AI on middle offices in banks around the world is going to be huge. There are so many tasks that can be simplified and streamlined using generative AI. It's kind of scary. Okay, now for the and finally section of the show, a look at something a bit more offbeat from the news this week, where I bring my three guests back in. So a British man has been jailed after trying to disguise £70,000 of criminal cash as a sandwich, according to Essex police. A lorry driver from Essex in England was stopped by the police after driving the wrong way, apparently trying to avoid detection. Oops, that worked well. On closer inspection, the police arrested the man after what appeared to be his lunch, nicely wrapped in tinfoil, proved to be £70,000 worth of cash. After investigating in conjunction with the proactive money laundering team, they secured a charge. The criminal and a dangerous driver is now safely behind bars. Amelia, what do you think? Is this just a not very smart criminal, or is that a cunning plan?
I mean, I think the most confusing part of this to me is the driving in the wrong way to avoid detection, and that seemingly being the thing that caused him to be detected. But it's quite funny if you look at the picture and it's just a piece of tinfoil with a lot of cash inside it. So I don't know.
How glamorous is financial crime? I mean, are most financial criminals incredibly sophisticated, white collar, computer programmers, or are they actually just sort of a bit hapless? Shaun, what do you see at checkout.com?
I'm glad to say I don't really know, because I don't hang out with too many financial criminals. But it sounds like an expensive lunch. I mean, I worked in fintech and had some expensive lunches, but never 70 grand's worth. I think like every system, it's only as strong as its weakest link. And I think if you've got a driver who does want to drive down the wrong way down a road, then I think you need to look at your overall money laundering processes, right? But I don't want to give criminals advice.
All right, question for all three of you. What's the strangest place you've either stored cash or found cash in your lives? Collin, that's a bit of an unfair question, but what's the strangest place you've ever stored cash?
Yeah, I don't know if I've ever stored it in the proverbial under the mattress before. I think I once stumbled across my parents had some cash in their closet in a shoebox when I was a child. And I remember thinking that, isn't it safer to keep it in a bank? Like, what are we doing here?
Ooh, parents' cash in a shoebox. I'm used to children raiding their, parents' drinks cabinets, but raiding the money store. Amelia.
Yeah, I don't think I have anything particularly out there. I was trying to think about this, and it made me think of it wouldn't have been the first. It would sort of piggy bank that I had when I was a child, which was when I opened my first bank account, which is what I was thinking of, which I got a little red safe from HSBC to keep my money in. And it was meant to be a safe, but it really made me think of American lockers, like in high schools. And I thought it was really cool. But it was just a little red safe, and it had a little key lock and a dial, and I thought that was great. And I Googled it before this, and they were being sold online on eBay as a vintage item, which made me feel a bit sad.
How much for?
Not a lot. It was £14. But the people who bought it were very pleased with it. So.
And how about you, Shaun?
Yeah, unfortunately, my story is very similar to Amelia's, but I may even predate her. I may be so bold to say. So NatWest, this was how you used to get children to bank, was to give them free piggy banks. I think that was the incentive to open a child account. And so they had these kind of a collection of pigs that were kind of NatWest branded, that were the kind of that's where you sort of that was their enticement to open a child account. And so I had one of those and used it for many years. So yeah, that's other than that, I don't think there was anything particularly odd where I stored money.
I remember traveling years ago in the days when there were things like traveler's checks, and I had a certain amount of cash in, I think it was US dollars, and I put them in a money belt, sort of wrapped around myself. But this being a tropical country, by the end of the day, the money belt was quite sweaty. And I remember thinking, I'm not sure I can actually spend this money because I need to actually properly launder it. Anyway, so that was a mistake, carrying the money that way. But these days, you can use network tokens. So, who needs cash? All right. Our producer says that he knew someone who kept their savings in the fridge. So really, that puts Colin's parents' shoebox into shame, really. All right. So that wraps up this week's Fintech Insider. Thank you so much to my three fabulous guests. You've been amazing. Where can people find out a little bit more about each of you and the work that you've been doing? Amelia, ladies first.
Thank you. You can find me writing on altfi.com. You can send me an email. It's just amelia@altfi.com, or add me on LinkedIn, Amelia Isaacs.
Collin?
Thanks for having me. Feel free to find out more at novacredit.com or find me on LinkedIn, Collin Galster.
And Shaun?
Yeah, so check out all our products, and our new launches are on checkout.com. And you can find me on LinkedIn, Shaun Puckrin.
And as for me, Benjamin Ensor, you can find me on LinkedIn, or you can find out about all the great work that the team are doing at 11fs.com. So thank you all so much for listening. I hope you enjoyed it. Please do join the conversation on social media. Thank you very much for listening, and goodbye.